Okay, today is Wednesday, September 21st, 2022, and we just learned the news that the Federal Reserve raised the interest rates by 75 basis points and want to know what that means to our home buyers in San Francisco. And so we thought to answer that question, we would turn to our good friend and trusted loan agent, Stephen Barber with Guaranteed Rate. Stephen, hello. And would you mind explaining a little bit more about that for us?
Absolutely. So yes, the Fed raised the Fed rate 75 basis points today. So what does that mean? So what that means is if you have credit card debt and you actually carry the credit card debt, if you actually look at your credit card statement or agreement, it is based upon the prime rate. I mean, that's how the credit card company figures out what to charge you if you carry the balance and have to pay it. If you have a home equity line of credit, also called a HELOC, if you look at your HELOC agreement, it is based upon the prime rate, which is the Fed rate. And pretty much for a consumer, that's pretty much all it impacts. If you're a corporation, they also borrow money in the prime. So if they're borrowing millions and billions of dollars, they're affected by this as well, which is why the government's doing it to slow down corporate spending as well, part of the economy. But mortgage rates don't work that way. They're influenced by this, but it's really not what is happening. You should think of mortgage rates almost how the stock market works with analysts and predicting the quarterly earnings for a company. If you're Apple and you have a stock out there that's on the exchange, the analysts are giving expectations and are providing information on projections of income and sales throughout the quarter. So typically in that environment, there's never going to be a surprise as far as what the company actually earns because the guidance is there. The same guidance is in our economy for mortgages. The 75 basis point raise has widely been expected. It's the worst kept secret in America. Everyone expected it, and they did exactly what they were supposed to do. So if you actually look at the markets today, the stock market, there was a little bit of a reaction. The stocks went down, but by the end of the day, they went back up. Everything because we did what we said we were going to do. And if you look at the bond market, and the bond market is really what mortgage rates are attached to, the bond market ended slightly positively for the day because the Fed did exactly what they said they were going to do.
Mm-hmm. And what advice would you give a home buyer right now thinking about buying a home this fall?
They should stay in contact with their mortgage advisor, and as they look at properties, get a quick scenario on what that would look like today. Hey, I looked at this house on Maple Street. Can you run numbers on it for me if I were to offer XYZ? So you should stay abreast of the market and understand what the current interest rates are. And if you can do 20% down or less than 20% down, that's always advisable. But there should not be this fear of that we're on a cliff or anything. Things have been very common in mortgage rates for the last several months. The first quarter was brutal, but it was once again widely anticipated. The Fed said, here it comes, we're going to be doing it. All right, bring it on. But the summer has been kind of calm. Rates have kind of steadied, and some people are getting good deals out there on properties where they're not competing against a dozen other people.
Yeah, I think it's important for people to remember, just historically speaking, these rates are not crazy. And if they can buy a home for under 6%, rate and think about that equity build over time, it's a really good decision.
Absolutely. I mean, rates, I have been doing this for 20 some years, although I look much younger on this video. And many times in my career, I've been quoting rates that are higher than today. And I mean, they're the perspective then was that it was a decent rate. It wasn't just coming off of a year where rates were ridiculously low. So it's just all perspective. A home is hopefully for the rest of your life. A mortgage is not for the rest of your life. It's just a starting point.
That's great. Thank you so much for your time, Steve.
My pleasure.
All right. Have a good day.
Bye.
Bye.